All right, guys, as promised, Miss Danielle Shay joining us from Simpler Trading, VP of Options at Simpler Trading on a Thursday afternoon, as per usual. Great to have you, Danielle. It's a crazy week, obviously. Still a lot of volatility, still a lot of, as we said, headline-sensitive markets to deal with this week. We'll get into that in a second. I want to talk a little bit about energy markets first off. If you're looking at oil in the pre-market this morning, you had to go all the way back to 2008 to find the last time it was trading at these levels. So huge run up, obviously. A lot of people asking questions on the short side. It's very easy, you know, when you get these extended moves to lean to the short side and say, oh, it's gone up too much. What do we do? It must, you know, be coming back. Yes, today we're down a little bit, but we got to be cautious here. How are you approaching this?
Sure, of course. Well, I'd love to show you my chart here. So following XLE, I mean, people have been asking me the same thing too. You know, hey, is it time to short energy, time to short oil? Honestly, that to me, that trade is just going to have so much to do with OPEC and the ongoing geopolitical issues that I feel like it's not just something you can take on a technical basis. If you look at the technical charts on XLE, yes, we're extended. I mean, I had a target at 72. I had a target at 75. Yes, we are starting to roll over. Yes, we are breaking the low. Oh, no, wait, not quite. Look at that. So close to breaking yesterday's low. If you really want to do it, then you have to do it by looking at a candlestick pattern. You want to see a break of the low of the previous day's candle, and you want to see a high volume follow through. Personally, for me, I don't want to step in front of that freight train. I would rather look at a couple different tickers within energy. For example, Marathon Petroleum. This one right here. Let's see if I can get my charts to load, but there we go. So for example, Marathon Petroleum, this one has a really nice trend on the daily chart. We've pulled back to the 34 EMA. We're squeezing, we're consolidating. I mean, I would personally rather go with the trend in energy and try to trade this one up into 85 over the course of the next couple weeks than short and run into that freight train. But that's just me.
Until it isn't, right? That's, I mean, you know, it's very simple. It's a very simple way of approaching it, but it does, you know, keep you out of a lot of trouble if you think about it. Let's shift gears here and talk a little bit about the overall markets, because we've had, you know, these headlines coming across almost on a daily basis. Even today, you know, again, we get the move back to the upside on some, you know, what seems to be positive movement as far as this Russia and Ukraine turmoil, I guess is a good word, considers to be. Anyways, let's talk a little bit about the indexes here. You know, where are we? What are you looking at? And where do we go from here?
The indexes are incredibly weak. Anytime we get any kind of even slightly positive news, we'll rally just ever so slightly, just enough to get short sellers to cover. Last week, the positive price action, that was just all short covering. That wasn't really, you know, buyers coming out of the woodwork and trying to buy this correction. And so what you really have to pay attention to as a trader is, number one, I mean, you can definitely buy a short squeeze higher. There's nothing wrong with that. If there's a news related gap higher and the put call ratio is really high and everyone's short, yes, you can go in there and you can buy that rally. But you have to understand that those rallies are not following through at all. And so what you don't want to get confused on is you don't want to say, oh my gosh, the market went up for 2 days. Let me just go all in long, because the momentum's just not really there and it keeps rolling over. So what I've been focusing on doing is I've been actually focusing on fading the moves, which is different for me because normally I am a momentum trader. But in this market, trying to go with the momentum because it flips so quickly is just the wrong thing to do.
Buy the dip was the theme, I think, of the past, you know, decade, it seems like anyways. But it also seems like things have changed to a point where
yes,
that is definitely not working as well as it has once. Earnings starting to wrap up here. We're getting to, you know, the end of earnings season. Costco, the big one coming after market tonight. I want to also talk about Snowflake, because you had a great little piece on Twitter that you spoke about Snowflake. So let's talk Costco first, because we have an opportunity in front of us. How are you going to play this tonight?
Sure. So in this market environment, because the VIX is so high, when you look at tickers like Costco that are fundamentally strong, this company is just not one that normally moves a lot on earnings. If you look at this grid right here, this shows the amount that Costco will gap overnight on earnings. On average, it will only move between 1% and 2%. However, because the VIX is so high, they're pricing in about a $23 move. And so when you're looking at where this thing could potentially end up, I mean, it could either be between 510 or 550. Now, for me as an options trader, when I have a ticker that is pretty stable, historically, statistically, doesn't move more than 2%, for me, that's a great opportunity to come in and sell premium. I can sell calls on Costco and puts, because if you look at the way that it reacts to earnings normally, half the time it's up, half the time it's down, but nothing much really happens. And so that's a good opportunity for me to come in the options market and make a neutral trade. So I haven't put my trade on yet, but what I was looking at was I was probably going to be selling the 535 calls and puts, and then I will buy some outer wings within the expected move, so about $25 wide.
Great name. Obviously, a lot of people, love the stock as a long-term play. Anyways, love going to Costco as well. So should be interesting to see how that plays out tonight. Let's talk snow in the sense that we've had this trend, it seems. And I even mentioned it today because they started buying up Costco right at the open this morning, going into the report, and it's been that way over the past couple of days. We've seen, a lot of positive momentum into earnings, only for the opposite to end up happening.
Yes, and normally I'm going to trade the positive momentum going into earnings. That's one of my favorite trades that I like to do every quarter. But this quarter, the tickers that have done that, like Ulta and Costco, have been so few and far between. And the newest pattern that has just been really in focus for me is watching for earnings destruction. So I threw up my watch list here. This is actually the watch list that I made at the beginning of this week. So I'll make another one for next week. But all of these companies fit the criteria very similar to snow. And these are companies that I was not looking for them to rally going into earnings. I was actually looking for them to fall going into earnings. And the reason for that is because they all fit a specific pattern. What you're looking for is you're looking for a stock that rallied exponentially, last year and the year before. And then what ended up happening was the cracks started to show between last quarter and the quarter before that. We started getting a couple earnings reports that would send the stock exponentially lower. And so because of that pattern, you have people in those stocks that have bought up at just ridiculous highs, and they're sitting there and they're saying, oh my gosh, please do not let this thing, do a Facebook or a Roku. And they want to bail before earnings. So you can look to trade these tickers before earnings. We've got Snow down 17%, Veev down 17%, GRWG down another almost 10%. And so I do think, especially for all y'all as day traders, it does provide a lot of opportunity to come in and look for post-earnings moves or even moves going into earnings, because this pattern right here is something that's been coming through really well this quarter. And when you look at a stock and think, can it possibly go lower? The answer is yes, it can. And earnings can be the catalyst for that.
Thank you so much, Danielle. This is why we love having you on the show, to give that perspective, because it's another opportunity for our traders to learn. But I want to kind of switch gears with you a little bit, because we get you on to share your expertise. We always have viewers that are joining us maybe for the first time, or they're just starting out in the markets. So being an expert in options, there are a lot of people that always say, okay, well, I want to get into options, but I don't really understand the basics. What are the first steps? Like, what would you tell somebody that maybe they have a little bit of experience in trading equities, maybe they've done some swing trading, whatever it might be. But what are the first steps? What should they read? What are the first things they should look at before they even consider making an execution?
Well, it's a great question. So I actually have a book coming out about that in the summer. It's not out yet, but we can talk about that at a later point. But these are the things that you need to do. I mean, number one, a lot of people want to get into options just because they want extra leverage, right? And so the number one thing that you have to do is you have to hone your ability to read patterns, because I mean, just like with trading stocks, trading options is the exact same. You have to hone your ability to trade patterns. You have to be able to recognize when you should get in and out. And then after that, what you want to focus on with option strategies is, what would you like to do? Would you like to trade in a neutral manner? Like I was just talking about with Costco, where you say, hey, you know what? I don't really care if the thing goes up or down. I just want to sell premium, because I know in the options market, premium's a very unique thing that I can take advantage of. And I don't care if it goes up or down. I just want to sell it today and I want to buy it back tomorrow. Or do you want to be the kind of options trader that says, you know what, I think Zoom is going to go to $100 and I want to figure out the best strategy that I can use for that. Now, most people get into options trading because they want to trade in a directional manner. So what that means is that you should start off with the patterns, and then next you should figure out which kind of strategies will work best for you in a directional manner. That's going to be calls, puts, credit spreads, and debit spreads. But what I always recommend to people, study calls and puts first, move on to debit spreads, then move on to credit spreads. That's, you want to do it in order, because that's the way that it's going to make the most sense. And once you understand how you can use those strategies, then the most important thing to do is to start practicing them in paper trade. Please do not jump into a market like this, with your real money when you're not sure how to use the strategies. The best thing I think for people is to start off by paper trading, so you can see how they really work out. And then you can hone your strategies after that.
Danielle, and maybe we'll get a free copy, Sean and I, of the book when it comes out.
Of course.
I kid, but thank you.
Can you come to me here quickly? Yeah, hey Danielle, what's up? Yeah, if we get a free copy, I want mine signed.
Well,
so that's
okay.
Well, obviously.
Yeah, and then I'll sign a little coffee cup for you. How does that sound, Danielle?
That sounds awesome.
All right. And you're invited here next time when you get a chance to come out to Toronto. Ever, you can come see our trading floor. We had some guests on there yesterday, so good stuff. Thanks, Danielle. Shay, back to Brendan.
Love that. I don't want to take up too much of your time, Danielle. Let's get your thoughts going into next week. Going to be an important week for the overall market and for inflation, for the Fed. We'll talk a little bit about this maybe next week when you come on, but give me, one or two initial thoughts, I guess, going into, again, on the 10th, guys, we're going to get the CPI reading, the latest reading on inflation, and then that'll be, of course, followed by the Fed coming up on the 15th.
So, I mean, this month is just ripe with catalysts, right? It's just, first of all, we're in a very weak situation with the indexes. We're not seeing the dip buyers come through at all. We have been below the 200 simple on the S&P for almost over 2 weeks now. Every move up into resistance has not been able to make it through. So when you have that situation, and then you also have these catalysts, which I can't imagine they're going to be good catalysts. I can't imagine that the inflation numbers are going to be good. So let's say I'm wrong. Let's say the inflation numbers are so much better, then yes, maybe we could get a short squeeze rally. But I can't imagine they're going to be a positive catalyst. I imagine that they continue to send the markets lower. As far as the Fed, we did get a little bit of a reprieve there, just because Jerome Powell did speak yesterday, and we did hear from him that it's most likely going to be a quarter-point rate hike, and they are going to take the situation in Russia into consideration. So I do think that was positive news for the market, but that move has already faded. So at this point, unless they do anything completely different, like not raising rates at all, I just can't imagine that it's a positive catalyst for the market.
On both, obviously, coming up next week, Danielle Shay, VP of Options at Simpler Trading. We appreciate your time, as always. Thanks for doing this.
Thank you.
See you next week. Good stuff. Lots of ideas there, guys, going into the final hour of the day.